when we're looking, like, I'm not building in big rent growth. We're not building in any rent growth, because right now it's, when we're looking at rents, here's like, if the average is 1,500, we're even going under that because we've seen a small drop in rents.
Estate Hustlers podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Capital. Today we are with Lisa. Lisa was transformed in 2017, a house hacking start, into a $40 million portfolio with over 200 doors. She is now focused on multifamily assets and shares her expertise as a VP of her local REIA, bridging in-person and digital real estate communities. Lisa, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yes, hello, Lisa Moore. I'm located in Salt Lake City, Utah. We focus on multifamily assets. Right now, we're really trying to focus on the up to 50 unit assets, focusing on the mom and pop landlords that are looking to retire and sell their assets. I got my start in house hacking. My background is financial analysis, so I'm very big on budgeting and finances and the numbers. So, retired from the W-2 world just over 2 years ago. It's December of 2021. Took some time off, and now we're back doing this full time. And looking forward to 2024 and really ramping up our business and buying as many assets as we can.
Very cool, and I like that you said up to 50. I feel like the when you get into smaller complexes up to like 50 doors, it's a lot easier to turn the property around if it's being mismanaged, as well as rent increases. You're not going in and having to reposition 150, 200 plus units that, ultimately one unit might be great, but now you've got to get a good tenant that wants to deal with everything else and everyone else at that. So it's a smaller scale play. I like it.
Yeah. And there just seems to be, in talking to other syndicators who are doing larger ones, there's a lot who haven't bought anything in the last year and a half because they haven't been able to find anything. Like where sellers are at and where buyers, it makes sense. There's such a gap in that pricing right now. The smaller ones, we've still been able to find not as many deals as we were hoping to find last year. We got a couple, but hoping this year we'll be able to find some more mom and pop landlords that are just looking to be done, but hopefully do seller finance. And
and there's a great delta right now with loss to lease, because I feel like a lot of people during maybe COVID era, they were just wanting to make sure that their properties were leased and income was coming in, and they didn't keep with the coming trend of rents rising. So there's great in this asset class. There's great loss to leases that you can capture, and really that's the easiest upside. Is just getting the property operational.
Yeah, it's amazing. Like we've talked to some owners, and there was one in about 45 minutes from where we are, and he's like, "Yeah, our rents," he goes, "we're raising up to $850. It's really good, blah blah blah." And I'm thinking, wow, like we have an asset that's 2 blocks away from you that are at 12 and 1300. Like $850. I'm like, if you think $850 is good, I'm like, okay, you're the stuff that we want to buy from, because they've just been doing it for so long, and for them it's paid off. Like they're making good money. And I'm like, look, I can keep paying you what you're getting because they're so far below market. I'm like, you'll keep getting your same monthly income. And in a lot of ways, it'll be more because you're not paying for your taxes, insurance, maintenance, any of that. And it's still going to be a good deal for us. Yeah. So it can be a good win-win situation in those.
Oh, for sure. Well, and we're coming in and we're also investing capital into renovations, updating the units and appliances. So, I mean, there's definitely, and that to me is a responsibility for any incoming buyer to get things up to date. But yeah, there's a balance. They're selling it for a fair price, making a great yield, and then we've got capital to inject. So we started getting into the weeds on the 50 units. Tell us about your first property, first acquisition, and then how that went, and then how it kind of led you to where you're at now, if you could.
Yeah. So I grew up in Massachusetts. I moved to Utah in 2016 and knew that I wanted to start buying properties. I took my first year just to figure out where I wanted to buy my primary residence, and I knew that I wanted to house hack, which back then didn't know what house hacking was, but knew that I wanted to rent out a bedroom. Didn't want to do a full-time roommate because when I had friends and family coming to visit, I wanted access to that bedroom and just didn't want anyone else in the house. So being able to put it up on Airbnb back when that was what Airbnb was just people renting out their bedrooms in a house and things like that, not the big fancy experiences you have today. So we started off with that and then met my now husband in that process. And he had a few properties, but wasn't actively buying anymore. He was working and rehabbing his. But my goal was to buy my primary residence, live in it for a year, move out a year and a half later. So we've house hacked, single family, duplex, triplex. That's really us being willing to move and to live in construction zones, to live in multifamilies. At one point we left the house that we're living in now, which is a 2-bed, 2-bath house with got a great yard, to live in a small 1-bed, 1-bath, like 500 square foot apartment 45 minutes north of where we live. But to get that financing, to get that, it being our primary residence, lower down payment, we had a much better interest rate. So we just kind of immediately wanted to start getting into the multifamily from the single family. It never seemed like a big jump in, when you're looking at them. To me, yes, there's differences in how you analyze them and stuff, but it was just kind of a natural progression for us. So we like the multifamily and the long-term rentals. We've dabbled in managing short-term rentals. That is not for me. I know some people that do it and do it very well, and we want to buy a short-term rental in a couple places. And I'm like, I will gladly pay you whatever you charge me, because short-term rentals is a whole other ballgame.
Yeah.
The long-term rentals, that is definitely, we know it, we do it well, we manage the asset well. We don't property manage our assets anymore, so now we just do more of the asset management. But we did it for so long that we know what to look for. If something happens with our property manager, we'd be able to step in and take over and make sure that our asset is still being run properly. So
that's a huge piece.
It is. And it's amazing how many people I talk to that are buying multifamily that have never managed before.
Yeah.
And it's at like the bottom of their priority. And
that's
it just,
mistake.
Yeah. I'm like, if you don't know how to run the business, like it's a big reason why a lot of them fail. And so many people, they're like, yeah, well, we're going to run it. I'm like, okay, have you ever managed before? They're like, no, but it's not that hard. I'm like,
yeah, the property is not the value add. It's always the operations and the business, and then what you can do to the property to improve it in the operations. So you've got to learn and know the business way before you go and invest in it. And if you don't know how to operate, you can't rely on your property manager to operate it, because they don't know what ultimately they're going to do what they feel like operations should be. And a lot of times they put people in front of them that have never operated a business neither. So it's
knowing like the experience that we have, like if they're doing something, like we'll know if something's not being done how we want it done, or if it's not being done correctly. My husband being a GC, when we see maintenance stuff, it's they had an HVAC guy. One of our tenants was complaining that they weren't getting enough heat into one of the bedrooms, and they sent an HVAC guy, and the HVAC guy's like, yeah, it'll be over $1,000 to put in a new ductwork. My husband went there and he's like, dude, just open up the vents and close a couple of, like, there was a bedroom that was way too hot and one that was too cold. So my husband went and literally just like closed the vents, and they're like, just adjust the vents. Like if there's a room that's too hot, like close off those vents and it'll push more hot air to the other rooms. And they're like, oh. And the HVAC guy wanted to charge over $1,000 to like run all new ductwork to the bedroom. I'm like, there's already vents there. Like that's not needed. So
yeah, and unfortunately, that's the industry. That's actually what gives the construction industry the bad name, is people getting taken advantage of, and all that's out there. And but it takes a trained, skilled eye and knowledge of hedging against those what would be costly waste of money errors and mistakes.
Yes.
Property management is notorious for throwing money at issues versus fixing the issues. So it's where, if you're vertically integrated, or you have the knowledge, you're protecting the investment and the investors from maximizing their returns, really, as far as operations go.
Yeah.
So on the property management's piece on it, and then on the Airbnb, that's very much transactional, and that's not why we get into real estate. But I share some pains along that. We have two of them just because we own the building and operate and work out of the building. Not there yet. We're moving next month, but it's very successful. I mean, it is. A lot of people like the space. That's good, but it's transactional and it demands attention. So.
Yes. Yeah. And like I said, like, we're looking to buy a short-term rental in Hawaii and one in Wyoming. And I will gladly pay the 20, 25, 30% to manage because I have zero desire to do it. And they can be successful, and the people that run them well, and that is like, they just have those skills. I know a few people, and they kill it. They do awesome. And that's just a set of skills I do not have. I will gladly have somebody else do that for me.
I'm with you. So when you finally decided to quit your W-2 and retired, what were the steps that you needed to take to prepare for that? Because that's a huge move.
It is. The biggest thing was for us was just looking at our budget and looking at our finances and just, okay, where are we at and how much more do we need to be comfortable? So many people say, hey, I need to replace my W-2 income. And I always challenge that because it could be the situation for some people, but it's not always. I didn't need to replace my entire W-2 income. We were willing to kind of take a step back. And so much of my money went to investing and back into the real estate. So we looked at it as, okay, we don't need to replace every penny that I make. We need enough to survive, be comfortable. And we knew that within a few years, we'd be able to build up our business, and that real estate was where we wanted to be in the future, and that our earning potential in real estate is endless. A W-2, like, you're going to get capped at some point. Even you become maybe Bill Gates or whatever, and you can make a boatload of money. But like most people, they're going to hit a cap in their career to some point, where real estate, like, it's endless. As much money as we want to make, we can. So for us, it was like, what do we actually need? And then looking at, okay, finding an asset that we could buy that would provide us that last bit of cash flow. And the other thing that we looked at is like, okay, what's the worst case scenario? I always try to be very positive and things, but you also want to be realistic. Like, okay, if this doesn't work out, what is that going to look like? And going through the worst case scenario, like, my worst case scenario was that I have to go back and get a W-2. So my worst case scenario was being back exactly where I was at that point. So to me, it was like, okay, this is all upside. Yes, you could end up having debt and things like that, like something catastrophic. But if it didn't work out, I'd have to go back and get a W-2. So I'm like, okay, so if I do nothing, I'll be here. And if I fail, I'll be back here. But like, so failing puts me back into the same spot that I am now. So for me, looking at what that upside was, and my worst case scenario was having to go get a job again, it became almost a no-brainer of like, all right, let's do this. Like, yeah. I'll take that risk. And we just ran with it.
Yeah. And no risk, no reward. I mean, you've got to take chances and bet on yourself, get educated, get your head right. My guiding light is if it's bigger than my head, meaning if I don't know the next 5 moves, then I get around people who do know the next 5 moves. And yeah. Essentially they'll lift you up just by being in the same room and just listen to how they handle the next 5 moves. Because now you know.
Yeah. So. You always will have problems. You'll always have complications and issues. It's just as you level yourself up and as you keep improving and moving up in whatever it is you do, your problems just become bigger.
Yeah.
So you're never going to get to the point where you have no issues, but I'd much rather keep leveling up and having larger issues to deal with and having to keep finding people that are ahead of me that are pushing me and things like that. So
the good thing in real estate is that there's always somebody ahead of you. No matter how big, you could have 40,000 units and there's somebody with 41,000 units. It's and the cool thing is that the people that are ahead of you are more than willing to help get you to where they're at. It's the community is incredible.
That is one thing that's really surprised me as I got into real estate was how willing people are to share their information. there's so many industries and things like that where it's like, well, I don't want to tell anyone, like, this is my information, I don't want to share it. And you get into the real estate world and people are like, this is how I was successful, this is what I did to get to where I am, and they're just so willing to share their secrets and talk to you and talk about what they did. And it's just so refreshing to go in there and you can ask anyone anything, and 99.9% of the time that person is going to be so open to telling you what they did, what the numbers were, like, how did this flip go, where did you mess up, and things like that. Like, it's very refreshing, and it's very nice to know that you can get in and talk to people and people are so willing to share their information with you.
Yeah, and there's also people, it's a game, it is a truly very competitive sport game as well, and there's strategies to everything, even as far as like closing timelines, like a 45-day due diligence, 15 days to close. There's a strategy behind why that timing very much favors the buyers. And you don't, when you start closing deals and you start seeing how other people are doing, putting them under contract, their timeline, how they're structuring the contract, it's a learning lesson in of itself, and you've got to keep doing it, keep showing up, and you'll learn these different nuances. It's incredible.
Yeah.
So on your 200 unit portfolio, tell us some challenges that you face, because you're getting into 200 families, a lot of personalities. So what are some things that you all have faced and some challenges that you all have overcome?
We've actually been very lucky as far as when we were managing and having tenants. Luckily, my husband was very good at screening people and getting good tenants in there. In 2023 had our first eviction that we've ever had to deal with. We had just hired on our property manager, and it was already heading towards eviction, this one tenant that had been in there for only a couple months. And it was, I don't know, we just have a very different mindset on things. But anytime in the past that we've had issues with tenants that couldn't pay, it's always been like, okay, what's going on? Just talking to them. And most of the time it's, we'll let them out of their lease. Is that ideal? No. But you look at what your options are of, okay, I can make you stay in there, but you can't pay me and you have no idea when you're going to get a job again. And I can keep adding fees onto you, but like you can't get blood from a stone. Like,
right.
There's no point in keeping people in there. So, our challenges of dealing with tenants, it's really just been, okay, let's just communicate with them. Like, why are you not paying? What is your issue? And a lot of times it's just like, it's probably best that we just split ways. Like, we're going to keep your deposit because you owe us money, but we're not going to charge you fees. We're not going to, like, you can't pay us. We're not going to get money from you. Just let that lease end. It's just, to me, it's a win-win for both sides. They get out quicker. We can get a new tenant in there quicker, and we're not drawing anything out. This one tenant did not. We tried the cash for keys. We tried everything. They just did not want to work with us. And then we found out that they had actually moved out like 3 or 4 weeks prior and were just lying to us. That,
oh, wow.
Yeah, just trying to screw us over. And I'm like, dude, you're trying to hurt us, but now you have an eviction on your record, and now you have over $8,000 that the courts have charged you a few $1,000s of their fees, and now you're going to get your wages garnished for the next however long it is. Yeah. So the tenants, so many people don't want to get into being landlords because of the tenants, but that's literally like one tenant in 20 years that we've had to evict. But they can be difficult, but most of the time, if you just talk to them like they're humans and don't look at them as just like you're a paycheck to me, with the exception of this one person, we've always been able to work things out. But It's definitely been some challenges at times. But
and I think anything worth doing comes with its own set of issues. So no matter what you're doing, you're going to deal with people and issues that come along with just dealing with that, no matter what industry and what trade that you specialize in. And I feel like property management, if you're managing for other people, that it would be tough to be motivated on that front. If you're managing your own portfolio, you're optimizing it, you're maximizing it, you're able to control every aspect of it. That's where it becomes bigger than just the business. But it's got its issues, and it's just like anything else. It's the better you run it, the tighter you run the ship, its expectations are set, it can go all the way down. You've got some bad actors out there that will do what they do, and they'll do it to the next person too. It's just the way that they're programmed.
Yeah, but so many people are afraid of of tenants and stuff, and for us, like, that's a problem that we don't see that as a big difficulty. And something else that we started doing with our tenants is when it comes time for them to renew, we give them like an anniversary gift. Yeah. And this kind of is twofold. One, it's typically something that's going to help our property. So we give them a list of options, but we also tell them, like, hey, if there's something specific you want, let us know. But like, we'll put a new floor in one of the rooms. We'll paint one of your rooms. We'll hire a cleaner to come in and do a deep clean in your place for 2 or 3 hours. We've had tenants want to put a new light in their bathroom or more outside lighting. But that's been like, our tenants have loved that. One, as I said, like, we kind of do small upgrades to our property, but it also makes the tenant feel like they get some say in what happens at where they're living. Like, this is where they live. It's their home. So when they have a say in what can be upgraded or what they can get, like, it's been really good. And I think it's one reason we've been able to keep tenants. Most of our tenants we have for 2-3 years, which is not that common in a lot of areas for long-term rentals. So
we'll put a USB charging outlet in the kitchen, and that's a huge hit. It's something that costs. It doesn't cost a ton at all, but it's such a huge convenience to just have available for the residents. But
yeah.
I like the anniversary gift. That's very cool. It kind of gives them a purpose to treat the property a little bit better and a different meaning for sure.
Yeah.
So you're financially talented as far as underwriting and auditing and everything. How are you underwriting your deals today and seeing what a good deal is versus a bad deal?
So, and this is something where prior to the last year, it was very easy for us to find deals. And this last year, I've been like, did I change something in my underwriting? Like, why can we not find a deal? But, I'm definitely on the more conservative side. If we're looking at rents in an area, like, I'm not going to underwrite that, be like, okay, best case scenario, we can get $2,000 a month. Like, I'm not going to underwrite it based on that. We're going to be, okay, where's the average rents? And a lot of times we're looking in places where we already have some assets. So we have a very good idea of what rents can be, but we're making sure that we're putting maintenance expense in there. So many people don't factor in maintenance or like their landscaping or snow removal if you live in an area that has snow. It's definitely very hard to find a deal right now, and it's really hard. And it can be very frustrating when you're underwriting dozens and dozens or hundreds of deals and you're just like, none of these are working out. But we just, we're not going to buy an asset that loses money. We're not, if it loses money right off the bat because it needs to be stabilized, that's fine. But once stabilized, we always look at, okay, what is it going to be once it's stabilized? So as long as once that asset is stabilized, it's cash flowing, but also looking at what our cash on cash return is. Right now, you can put money in a CD and it can be 4, 5, 5.5, 6%. So to find investors that are okay with like a 3% cash on cash return, like, I can put my money in a CD with no risk and get more than that. So it has been difficult finding deals, but we stick with our numbers. We're not going to buy something just because we're desperate or we really want to buy something. But for anyone that's like out there underwriting, it's frustrating now. You got to put a 50% down payment down. And even then it's still like you're barely break even and your cash on cash is 2%. And so we just ideally will have a cash on cash that's at least around 8% once it's stabilized, ideally double digits. But just with the way the market is now, we're willing to be, a little lower on our cash on cash, especially when our interest rates are 8%. Now we just actually are working on a deal right now that we just got quoted 7%, which I was like, oh man, that's really good. So starting to see those come down. But it's difficult now. The deals are still out there, but they're definitely a lot harder to find. But
what market are you underwriting?
Salt Lake City.
Okay.
In the Utah, so Ogden, Salt Lake City, some other areas of Utah, but we're focusing just on the Utah market right now, which is a more expensive market. Salt Lake itself, some of the outskirts are less expensive, but you still have some pretty strong rents. So
Yeah,
that's
I like secondary and like the tertiary line. It's a
yeah,
path of progress, like baked in path of progress. Might take years, but there's strong rent growth and the tertiary ring as well.
yeah,
We're finding we're able to underwrite deals and get them to pencil. It's the debt component when you put in the value add and your capex and being able to access your capex funds. It's the cost of capital is it's
killed the
tough.
deal.
Yeah.
Yeah. Yeah. You look at them and your NOI is good. And then you're looking at everything like what's your rehab and your CapEx and all that. And then you factor in your debt and it's like that's been a deal killer. So that's why we're really trying to focus and find sellers that are willing to do seller finance. Cause like if your cap rate's 5% and your interest rate and your mortgage is going to be 8.5%, like it just doesn't, the interest rates have definitely been a deal killer on most deals that we've been looking at for sure.
Yeah, another strategy you might explore is a seller carryback, where they can maybe bring back 500 to a million at closing, and then lower the cost basis of the debt, and then they would essentially have the balloon when you refinance or sell it. That's been one that could be successful for you too, if you're seeing
Yeah.
that it's just not penciling. Um, but yeah, I mean, there's just and that's real estate in general. There's creative ways to make it happen as long as you got a willing seller, which sellers typically want to become the bank if they can. So
Yeah. Yeah. There's been a lot of assets here in Utah where a lot of like they're looking to sell to 1031 into something else. They're not looking to do any of the seller finance or the creative stuff. But yeah, it's out there. And yeah, the creative stuff is definitely, if we can find a seller that'll do the carrybacks and stuff, that's definitely ideal.
yeah, for sure.
So
For sure. And then as far as rent growth, I mean, we're flatlining rent growth. We'll get it to market, and then we feel like we're definitely at a plateau. So no rent growth for the next 3 years, and then we'll see where it goes from there. But just
yeah,
conservative underwriting.
yeah, we've definitely, and we've seen this a little drop in actual rents.
Yeah.
So yeah, when we're looking, like I'm not building in big rent growth. Yeah, same. We're not building in any rent growth because right now it's when we're looking at rents. Here's like if the average is 1,500, we're even going under that because we've seen a small drop in rents. So hopefully that does start to level out. I think this spring will be interesting to see how things go and whatnot. But yeah, we definitely are not expecting any big growth in rent or anything like that. And another thing with people that I get a lot of deals sent to me and people are like, yeah, this is going to cash flow, X amount of dollars and things like that. And I like to tell people, like, don't trust what anyone tells you. If someone says it's going to cash flow X amount of dollars, like, and even when I see people posting deals online and they're promoting their deal, and then you find out their cash flow, it is strictly taking their gross rents and backing out like just their principal and interest. So if you're looking at smaller assets and people, you're like, man, how are people getting $3,000, $2,000 with this fourplex or 10plex or whatever it is? And they're like $800 a door, $1,000 a door. Like when I dig in and start asking people, they're not factoring in maintenance. They're not factoring in vacancy. They're not factoring in CapEx. Like, so just make sure you're running your numbers for how you are going to run that asset. And if you're going to have a property manager, somebody could be selling it and they've got 300 doors. So they get their property management for 3%. But for you, it's your first deal and you're going to be paying 10%. So just make sure you're running your numbers based on how you're going to run that asset and not how your seller is running it and what their numbers are. Always use your own numbers and make sure you double check. And
yeah, it's not what you make, it's what you keep.
Yeah.
For sure. Cool. What advice would you give someone looking to start multifamily real estate investing?
Really figure out what your goal is, because you get so many people want to know, like, how do I start in real estate? To me, everything starts with what's your goal. Even if you're wanting to get into multifamily, but you could have a W-2 that you absolutely love, or that right now you're just not wanting to quit because you make really good money. So you could be someone like, I want to get involved, but I don't really want to quit my W-2. Well, you'd be an LP, invest in other people's deals. So start networking with GPs and people like me that are looking to buy the assets and will be looking for investors. If you're somebody that's looking to get involved in actually buying them, network. If you're new to the space and you want to get involved with multifamily, look up local meetups in your area, look up local REIAs, real estate investor associations, and just start showing up and going to these meetups and going to where other investors are and talking to people and networking. And we go to a lot of local meetups, and you may see somebody once or twice, and then you see them again 6 months later. And it's when somebody's showing up regularly, that to me shows like, okay, they actually really want to do this, and people are going to be far more apt to be like, hey, let's come on board, or we'll show you this, we'll show you that. But to me, the networking and just being around people doing what you want to do is such a game changer. The knowledge you get from it, the motivation you get from it, that's definitely, relationships is such a huge part of multifamily. So if you're looking to get involved, the number one thing I'd say is just start going to meetups and start networking with people that are already doing what you want to do.
Yeah, just to add on that, the old adage that if you find a good deal, the money will come. That is not true. It's relationships. Who's the jockey on a horse and who consistently shows up for those meetings builds trust. If you find a good deal, you're showing up for the meetings. You might have all the capital you need in that room if you consistently show up.
Yes, yeah. Somebody shows up one time and they're like, "Hey, I've got this deal." Like, you don't know them, you don't know if they're trustworthy, things like that. So yeah, showing up, being consistent, and if you do find a deal and people know you, they're going to want to help you. Like, that is one thing I love about the real estate we were sort of touching on earlier. Like, we want to see everyone succeed and we want to help people. So you show up and you show that you're actually putting in the effort and really hustling and things like that. You find a deal, you're going to find people that are going to help you make it work.
Yeah, absolutely. Very cool. Lisa, we appreciate you coming on the show today. If somebody wants to reach out, learn more about you, how can they get a hold of you?
Instagram is probably the best way. More Doors with Lisa is my Instagram handle. So definitely follow me there. And you can find me Lisa Field Moore on Facebook as well. But yeah, give me a follow, and any other questions, don't hesitate to shoot me a DM, and love to chat more.
Very cool. I love following you, seeing your activity, and we will certainly talk soon. Appreciate it.
Awesome. Thank you, Josh.
Thanks. Bye.
Bye.